Welcome to Pixalearn. We offer expert-led courses for CPA, EA, and other professional certifications to help you advance your career.
So today we're going to start with business deductions. If you see till now, we've already covered about gross income. What are we doing? We are still on form 1040, and a part of gross income also includes the income from Schedule C. So if you look at it in our gross income, so what we said, okay, see, we started with gross income, and from gross income, we are going to deduct the first layers, right? As we call as adjustments. And then I'm going to arrive at the adjusted gross income. Now, what we are doing is a part of this gross income is called Schedule C income, which is the income for an individual from profits and gains from business and profession. Basically, this is what we call it in India, but typically this is also termed as self-employed income, right? So if, let's say, anybody carries on a business as a sole proprietorship, you're going to get this income. So you have income, which is called our business income, also called Schedule C income. And from here, we're going to reduce the business deductions. And the net figure actually is my income from business, or basically we call it Schedule C income, and then we take this income and report it as a part of gross income. So this is exactly what we're going to do today. What are these business deductions? What are the guiding principles behind them? And then a layer of and a plethora of the items. One by one, we're going to take each of those items. Now, see, it's very important that you understand the significance of this topic, because it's not just in the part 1 exam that it will be relevant. It will also be relevant in our part 2 exam. So right now, our approach to business deduction is whichever topic is being dealt with here, we are dealing with it in a way that you do not have to repeat it in part 2. Hence, probably we're going to take a little bit more time to do this, because there are a lot of overlapping provisions, because later on, even in business, you will have sole proprietorship, partnership, S Corp, C Corps, and the governing principle behind the deductions of these business expenses would remain the same. So what we're going to do is, over a course of the next couple of sessions, we're going to talk about the deductions and then a lot of these individual items. Now, by this time, there are items which we have already dealt with as a part of gross income, like compensation. So when you receive income by working for somebody, that income becomes a part of your gross income, which we have already covered. Now, the same thing when taken from the perspective of the employer becomes a business deduction. So this is actually a repetition of what we've already done in gross income. I have taken a couple of slides from there and just added the part which is new as far as the deductions are concerned. And then there are a horde of such deductions, which again is applicable both for part 1 as well as for part 2. And in the end, we're going to talk about the summary, which brings everything together. Now, what kind of business deductions are allowed as a deduction? Now, first, the most important and the guiding principle is that the amount should be related to the business. The amount should be ordinary, something which normally occurs. And please remember, this does not mean not frequent. So what we're telling is it's not relevant that the amount should be something which you keep incurring every 15 days or 1 year. It may be an amount which does not feature so common in a company's business, like a legal lawyer's expenses for defending a case. But still, if you're running a business and if you have to spend on the legal charges to defend your business, then that's an ordinary expense, which is necessary to carry on the business. And this is very important. The amount should be reasonable. Considering the trade and considering the rules of the business, it should be reasonable for a business to ask for a deduction of that kind from Schedule C. So very importantly, understand that it has to be related to for-profit business, should not be gratuitous like not-for-profit. Second, it should not be engaged in as a side gig. And here the IRS rules are very clear. What are these rules? They say, in case if you just start as a side gig. So today, let's say if I'm running Pixalearn, but then side by side, let's say I just start making candles and then selling them. Making candles and getting money out of that is a side gig, and probably I did not mean to make it my second business probably. So in that case, the IRS says very clearly that, see, this is not your business. This is a hobby. And for hobby, the only rule is put your income to tax. So let's say I generate $5,000 from that business for the entire year, and I ended up spending $2,000 in order to generate that income. They say, see, this is hobby income. I will not give you any deduction for expenses, but you will have to pay tax on full $5,000. Why? Because this is hobby. But then here also they're very clear. In 3 out of 5 consecutive years, if you end up making profits from this business, then forget calling it a hobby. It's not a side gig anymore. It's a healthy, robust side business, which is business number 2 for you. So what I tell you is, please remember that these deductions are related to for-profit business, not for not-for-profit. Second, these items must be related to an active business that you're running, should not be for hobby, because hobby deductions are not allowed. And third, generally, if the money is being spent, let's say, for example, you're paying somebody their compensation or salary. What do? You give them a Form W-2. Maybe somebody is not an employee on your payroll, but still that person is working as a contractor for you. Then you give them something which is called Form 1099 NEC. But the moment it is for reasons other than both, so maybe you're paid rent, or maybe so all of these incidental expenses that are being paid, you still have to substantiate that payment for information purposes, just like you give Form W-2 to your employees. Similarly, there's a form called 1099 miscellaneous that you have to release to the other party. But remember, this form is only applicable for individuals, and the amount should be more than $600. So more than or equal to $600 for the entire year before you submit a Form 1099 for a particular person. In other words, now please remember, this is only for individuals, because see, understand the logic behind it. As an individual, the IRS does not have a trace of where are you generating your income. So when I, as an individual, let's say I am being paid salary, IRS wants me to report it on my 1040. IRS also wants my employer to give me a supporting documentation where I can match whether what I am being given, what I'm disclosing on my tax records is correct or not. Similarly, if you look at every other expense, the idea is a second set of data with the IRS to check whether the income being reported by a party is correct or not. But see, for corporation, already there are a lot of auditing requirements, and there are a lot of report, making of the accounts, financial audits, all of this are there. So we're not that rigid when it comes to corporations, but we're very rigid when it comes to individuals who are getting this money. And also we want this money to be above a particular threshold for the business to take that effort to give a Form 1099. So the rule is not applicable generally. So there are some exceptions which we're not getting too much because it's beyond the scope of your paper. It's there for individuals, not for corporation. And the minimum amount to be paid to that individual during the year has to be $600. That's it. Okay. And please remember, as a rule, we don't want people to make, to earn money by showing these deductions. So the cardinal rule is, if you've not offered anything in the gross income. So what we're trying to do is, this is gross income that we have already reported. And if you remember, the entire schedule 1 had this, right? And from here, I'm trying to give you some deductions before this income gets reported in either Form 1040 or maybe other heads of, other forms and schedules. So the idea is, if you've not given anything in the gross income, then ideally you should not be getting any deduction. We cannot have a zero income producing activity and a deduction being given for that activity so that you end up claiming a refund for that amount that you've spent as an expense. We don't want that. So you can reduce your income tax by showing lower income, but you cannot get a deduction for an expense which did not offer anything to be included in the gross income. So keep that in mind, because this is very important. Okay. This part is interesting and easy also, right? So what I'm trying to tell you is, now the expense may be incurred in you either for yourself. So you're a self-employed and there's a business expense that you're incurring. So let's say I'm running my business, Pixalearn, and let's say I'm generating some normal, ordinary, necessary, and reasonable expenses to run that business. For example, I'm buying material, I'm recruiting people, I'm paying for my LMS, a lot of other stuff. So we say, see, if you are working and the work is in the form of a business that you've organized or a profession that you're running, in that case, you do get to get that deduction as an expense deduction to reduce your gross income. Fair enough. The problem is, what if you're an employee? Now, in general, if you are an employee, then any kind of expenses that you can deduct, I have clearly given you a schedule, which is Schedule A. So any kind of personal expenses that you want to get as a deduction, you can claim there and nowhere else. So general rule, if you're incurring an expense and that expense is not being reimbursed by your employer, we don't even cover that within the purview of our discussion that we're going to have here. But what if I'm incurring an expense, but my employer is paying me back that expense? Now, in that case, the question that IRS asks you is, are you getting this money? So is the payment, so are you getting this as a wage? This is the first question that I want to ask you. Is it something which is camouflaged as a wage income or a salary income, but we are calling it an reimbursed expense? Or is it a business expense? Actually, so are you a conduit who is just incurring this expense on behalf of the business? Or let's just say, or incurred on behalf of the business. So basically, it's a very simple concept, right? So what I'm trying to tell you is, let's say there's an allowance given to you as a let's say professional allowance, and that allowance is given, and that is a part of your salary slip. Every month, let's say $5,000, the company pays you, and you don't have to keep any record, and you don't have to substantiate how you spend that $5,000. So let's say nowadays a lot of companies do it, right? So let's say it's for professional development. So if I want to take any course or something, I can do it. So it's an amount of fixed $5,000 a year broken into 12 months, and it comes as a salary credit, and the employer does not bother how they're giving me that, how that I am spending that amount. I could be spending it as a part of my actually taking some course, I could be spending it on something else. I don't have to substantiate it. Now, in that case, they're very clear. They say that, see, this is a non-accountable plan. I'm not supposed to show any accountability to my business in order to let them know that this amount actually I've spent in gathering knowledge. No, I'm not supposed to do it. It's just that they can't show me a big amount of basic wages. So they have camouflaged my salary income as professional expenses, professional empowering or furthering your professional interest, something like that. So just call it an allowance. Now, in this case, it becomes a non-accountable plan. So either the two cases, you're getting a reimbursement for the expenses that you're generating, but nobody is bothered. Either the reimbursements is much more than what you've spent, or I don't have to go back to my company and submit the receipts. Now, in this case, it will be treated as a wages. Simple. It is not a business expense. It is a wage in the hand of the employer, and the employer gets it as a compensation deduction, and it is an income in the hands of the employee, and the employee gets it as a gross income. But if, let's say, it's an accountable plan, which means what? The employer has to spend an expense, but the employer has asked me to spend it on his behalf or her behalf. I spend that money and I give the receipts and I substantiate that payment. And in case if there's something extra, I return it to my employer. So let's take an example. Let's say you're taking a foreign trip on behalf of your employer. And the employer says, okay, you take the expense on your own. I'll reimburse you for those expenses because these are business expenses that you're expending. So what do? The employer gives me $5,000. I go for that business trip. I actually spend $4,500. So I come back, I give a detailed substantiation. So all the receipts, hotel bill, airfare, everything, I give that details to my employer. And this $500 that I had extra, I give it back to my employer. Now, in this case, we call this as an accountable plan. Why? Because whatever I'm being reimbursed is actually the expenses that I have incurred. And if there is any excess that I had, I'm paying it back to my employer. Also, I have to substantiate all my expenses. There has to be a receipt. There has to be a there has to be a proof that the money has been paid. So two things, if it's a self-employed income, business expense, you do get to deduct it from your Schedule C. If you're getting it as an employee, ask yourself, am I getting reimbursed? If yes, then find out is it part of my normal allowance in my salary and I'm not supposed to be reimbursing anything to the employee or submitting any details. In that case, it becomes a part of your wages and you pay tax on it. The employer gets a deduction as wage expense and hence save and get a deduction, but not as a business, as a travel expense. I get a deduction as a compensation expense. In case of accountable plan, the employee is not going to record anything. So remember, for the employee, just look at this. I think I have, okay. For the employee, this amount will not be included in gross income. So don't pay tax on that. For the employer, you get a deduction. And in my example, you get a deduction as travel expenses. You don't call it a salary expense. You call it a travel expense. On the contrary, on the other side, if it's a non-accountable plan, then you do call it a compensation expense, and hence the employee has to include it as a part of his or her wages, and the employer does get a deduction, but as a compensation expense. It's like paying off your employee. So this is an important stuff. So generally, this is not difficult. Okay, the moment you have an accountable plan on your exam, it's not a big deal because you're able to substantiate and you know that there's nothing in your books that's important. So even for gross income, this is a figure which is easy. It's not very difficult to find out. Let's take certain questions on non-accountable plan to help you understand this provision more practically. Also, please remember there is one extra leeway that is given by the IRS. IRS says that, see, if it's a normal transportation expense. So let's say I went from here to the airport, then I took an aeroplane and I went somewhere else, and then I stayed in a hotel and all of that, right? The IRS says that, see, if it's a cab expense or a taxi expense, if you have been able to cap it at 0.70 per mile, then you don't have to substantiate for me. Okay, so you don't have to, give me all of those sundry bills for cabs. Just take a blanket 0.70 per mile for 2025. And this is an indexed figure which changes every year. Last year it was something around 0.67 if I'm not wrong. So this year it increases slightly. This figure keeps increasing every year. So typically we say, okay, just submit an expense claim where you take 0.70 per mile and we're sorted. I don't want you to give me any bills for this. Just look at two questions which establishes the non-accountable plan. Based on the tax regulations, what are the specific reporting obligations for the employer regarding this allowance, and how must the employer, okay, report these funds and expenses on his own tax return? The employee receives a monthly allowance of $500 into 12 gives you $6,000 from his company to cover professional expenditures. Under the arrangement, the employee is not required to submit receipts or documentation verifying his spending and is permitted to retain any surplus money. The moment you know this, you see this, you know that it's a non-accountable plan. And if it's a non-accountable plan, see, they've given you all of this information. How much was the actual amount that was being spent? But the IRS is not interested. The moment it becomes a non-accountable plan, the rule is simple. The employee is going to report it as a gross income and pay tax on it. The employer does get a deduction, but as a salary deduction, not as a travel expense. So we'll just look for the answer choice that matches this. So the employer adds 6,000 to wages. That's correct. The moment this is correct, I know C and D are definitely incorrect. Now we need to know is from the employee's perspective. The employee reports, okay, this is incorrect. Please remember there was once, long time back, before the Tax Cut and Jobs Act. By the way, Donald Trump came and there was a huge difference in the Tax Act. Once again, there is a one big beautiful bill which has been introduced, which is going to again change everything next year. But thankfully, I'm hoping that you guys clear this year itself. So there was something called 2% miscellaneous itemized deductions. Now, this was scrapped until last year. They kept saying that we're going to scrap it from 2018 to 25. But this year they've made it a very clear declaration that this was scrapped forever. So anything, any question which refers to 2% miscellaneous itemized deduction threshold, please remember that's a wrong answer choice. So I know that this is incorrect. The only correct answer then becomes B. So the answer for this question becomes B, which is very clear. The employer is going to add it to wages and then report it on Form W2, which means the employee is going to add it as a part of their gross income. And the employee takes no deductions on Schedule A. So there is no miscellaneous itemized deductions on Schedule A. So the answer becomes B, B for Bombay. We take one more question on this, which is, what amount is she permitted to deduct as an itemized deduction on Schedule A? Now, the moment I look at this, I know the call of the question. I probably know the right answer. So just think about and look at all the answer choices. And even before reading anything, I can come up and say probably C is going to be the right answer. Because I know there is nothing that I can deduct on Schedule A, which is miscellaneous. But they have not written the word miscellaneous. So let's just see. Let's just give it a benefit of doubt. E, a field environmental consultant, uses her personal SUV to travel to multiple industrial sites to test soil and water quality for regulatory compliance. Her company pays her a flat $350 monthly stipend to cover her operational overhead without requiring the employee to submit a receipt or mileage logs. Now, they've made it very clear to you that it's a non-accountable plan. The moment it's a non-accountable plan, all of this information about what was reported, what was spent is irrelevant. I know, will there be anything reported on Schedule A? The answer is no. So my gut feeling was correct. There is nothing that can be reported on Schedule A, period. Okay, thank you.